Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for May 22nd, 2024. Well, hope everyone had a great evening, got all rested up because we've got another wild day coming here in the market. How about we shake off a little bit of bias when we take a look at some of this data and see if we can figure out how we might want to approach the market today. First off, let's take a look at some of those things that happened overnight real quick. Asian markets were mostly lower last night. There was a bunch of Japanese data. Only Shanghai managed to eke out a 57-cent gain. Everything else was down. The Nikkei had it the worst, down 0.85%. European markets are also lower this morning across the board, showing some concern because the UK estimates on inflation missed, and the UK inflation was higher than expected. So a little bit of concern and issues over there as well. And here in the US this morning, we actually have red in our futures this morning. We had a little bit of a mix of that yesterday, but it immediately started to move back up. But we've already had some data out this morning that is really starting to compound on this idea that the consumers are in trouble. So we're seeing red across the board here this morning as we set up for the day. Oil this morning is lower. They're suggesting that there was a build in supplies. We'll find that out later on today in our petroleum status numbers, but we've got oil down 40 cents a barrel at 78.26, and Brent oil is down 39 cents at 82.49 a barrel. And then we've got natural gas is lower too, just a little bit by about 3 cents. Our precious metals are down across the board this morning. Gold, silver, copper, platinum, and palladium all looking lower here this morning, also affecting steel here today. If we take a look at our cryptos, cryptos are bouncing up here this morning. They had quite the reversal yesterday, finishing lower on the day, but Bitcoin being up 737 points here at the moment this morning. So we'll keep a close eye on those with a mix of data going on in there. So what does all that mean for today? Well, oh, hey, I forgot the bonds. Better take a look at those because the 2-year bonds are moving up. The 2-year bonds have ticked up to 4.86%. The 10-year is at 4.44, and the 30-year 4.57. So maybe a little bit of concern about what the Fed may be talking about here in their minutes later on today. So once again, what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here today. I truly appreciate it. As I mentioned before, let's look at these charts without a bias and see if we can figure out how we might want to approach the market for today. Well, looking at here at the diamonds, you can see we have a very bullish pattern here, just that consolidation resting pattern here in the chart. So far, as we pushed back with a little bit of bearishness yesterday, in the pre-market, it didn't hold. They started pushing it back up, and you can see just a consolidating resting pattern here in that chart, and that is a very bullish pattern as long as we continue to hold support and hold trend. And as we move closer and closer to this trend, we would look for that possibility that the buyers could step up and push on through in that chart. So if the bulls can do that, look for that opportunity to push on up. We would first have to retest these high wicks to see if we could push through. And if we can, then of course there's blue sky up there, no resistance above in the charts if the diamonds can make that move. And certainly we've got some data today that might help in that process. If we take a look On the bearish side, however, perhaps a stumble that could happen in the market. Well, a pushback down in here, I would suggest this little level right through here would catch us in some price support. And if that doesn't catch us, then we're probably moving progressively lower in here in the chart and maybe testing that upside trend for a possible break. So watch that carefully. A break in this trend up here might signal a little bit of fear in the market, because we have been acting as if we have no fear at all in the market, and we are very separated from our 50-day moving average. So just keeping in mind, we would need a very long-term consolidation up here to allow that 50-day moving average to catch up. If we don't get that and we get a sell-off in there, we could down fairly quickly toward that 50-day moving average, because we've left a lot of gaps behind in the market on this uber bullishness that we've seen here. If we take a look at our SPY, also in a very, very bullish pattern, consolidating here over to the trend. We've got blue sky up here. All we've got to do is pop on out of these little highs here in the chart, and we've got blue sky above, and every reason to believe with corporate buybacks and things going on in the tech sector. And it was again mostly tech giants yesterday that made the grade here to move the markets up. So every reason to believe that that could be possible and push on through for new record highs again. If, however, they happen to miss and we start to see a little bit of bearishness come into the market, well, a retest of this little consolidation level would be the first area I'd be paying attention to. And then beyond that, we're going to come back down into that area of support. That, of course, would give up this upside trend, at least temporarily, and then pushing on lower from there. Notice we've got a little gap in here that we could fill. We could drop down into this level of the chart relatively easily, I think, with the stumble in the market. And please keep in mind, that would not bring us even, we got a long ways to go yet to come back down toward that 50-day moving average. So kind of keep that in mind. We are very extended here in the short term, particularly in anything tech. If we take a look at QQQ, our QQQ very, very strong here, continuing to make new record highs yesterday on the backs of those corporate buybacks. And by the way, let me just take a second, and I'm going to back this up here. If you'll notice that we're continuing to rally, look at how low these volume levels have been here in the charts. A very weak volume as we continue to rally to the upside here in the market. We're running out apparently of that enthusiastic energy here in the market. It was a hurry up and wait the last couple of days. Be interesting to see if we can find something to inspire to bring a little bit more energy or breadth into the market other than corporate buybacks. So keeping an eye on that, there's every reason to believe that this could move on through and make new record highs here in the QQQ, with those corporate buybacks really pounding in there hard. If we take a look right in here, this would be a support level I would be watching closely, because if we pull back, we've only got a little tiny area of support in here on this stretch to the upside. So if we were to pull back here, stumble in here today, push back down, then look for this level to be tested in here relatively quickly, and then we've got a gap in here that could be filled. So this would be the next area down, and that would give up that trend. Now, that may be a little bit hard to see as a possibility with NVIDIA earnings this afternoon. They are highly anticipated here today, so watch carefully for that. If NVIDIA were to happen to stumble in any way, shape, or form, we could likely see us move this down pretty quickly on Thursday morning. So watch that carefully here in the NASDAQ. If it happens to perform really well, then I would expect more blue skies in both particularly in both the QQQ and the SPY. It may also provide just enough energy with three major techs in the diamonds to push that to record highs as well. And then if we take a look at our IWM continues to struggle against this resistance in the chart. We're kind of slipping past beyond this upside trend here. But no worries, at least yet. We're just banging our head against that. We're looking for some kind of inspiration to make it through. Unfortunately, NVIDIA is not going to help out IWM here. So we'll have to watch this carefully as we're continuing to try and break through this multi-year high here, or resistance in the chart. Watch that closely. If we can break through up here, then we'll start looking for these levels up here for testing. And then, of course, we're going to have to go over there to all the way back over here to 2021 and 2022 to look for those next resistance levels in the chart. If the bears, however, were to find inspiration, you can see it wouldn't take a whole lot of effort to drop down below that support. We've already slipped the trend here just a little bit. Then we'd start testing these progressive lower levels in the chart. So watch that carefully on the Russell. Remember, all four of our indexes are quite a ways elevated above our major moving averages. Let's take a look at our VIX. This is another thing that worries me here. Our VIX is showing absolutely no worry at all. It's getting into a point of extreme complacency as we continue to drop here. We're now into 11 handles here in the VIX, showing no fear, no worry at all, despite the fact that we are seeing quite a little bit of evidence that there is a weakening consumer. I'll talk about that here in just a moment, but watch that carefully. Let's take a look at our T2122. Our T2122 pulled back a little bit yesterday, so as we were continuing to show bullishness in those indexes and that pump up at the end of the day, just note that we had more stocks selling off than we had going up. So if we can find bullishness in the market, our T2122 has opened opportunity for the upside if those bulls have something they can grab a hold of. If the bears continue to have something that they can grab a hold of, well, we still have a pretty sizable downside move. And remember, all we need to change this a lot. We don't have to sell off. We could have a nice longer rest in the market, a nice consolidation. You know, it's healthy for the market to rest. So if that were the case and catch a little bit more rest in the market, we would see this likely drifting to the downside and providing some of that pressure release in the market. If we take a look at T2108, our T2108 kind of reflecting what happened yesterday with just the percentage of stocks above the 40-day, just a slight fade to the downside. It was really lethargic most of the day yesterday, kind of a hurry up and wait, waiting on the FOMC minutes, waiting on the NVIDIA report that's so highly anticipated. So watch this closely. We're still holding well above our 50% area here in the chart, but keep in mind, if the bulls can find inspiration to push on up, and every reason to believe they could, we might be up here testing that downtrend to see if we can break that, pushing up here to test some resistance areas in the chart. If we continue to see some selling, notice we've got a little price support areas right in here before we come into that 50% area of the chart, which could raise a little concern if we start seeing the number of stocks above their 40-day moving average dropping back below 50%. If we take a look at our T2107, T2107 continues to hold up really, really strong. Obviously, just a little bit of fade yesterday. No particular worries here at all. We've got good supports below. We will notice that as we start pushing up here, we're getting into this very frothy zone up here where we struggle going above that area here in the chart. So A lot of resistance up here as well in that, so watch that closely depending on which side of the market, bulls or bears, decide to get active here today. And then if we take a look at our T2101, well, we can see the problem that we had yesterday. The market breadth, as we continue to rally, the breadth of the market is continuing to decline. So we need some kind of inspiration here today to fire things up and get things going in the market. Unfortunately, we're just not seeing that buy momentum following through, other than just those corporate buybacks that keep tweaking us just a little bit higher in the market. That could snap really quickly, so be prepared for the possibility, if we do stumble, that this could change very fast. Let's take a look at our there we go. Let's take a look at our economic calendar here for today. In our economic calendar, we've got a bit more going on here this morning. We've got mortgage applications this morning, and the mortgage application reports have already come in, showing a little bit of a decline here in those mortgage applications here today. So watch that. We're going to get Goolsbee coming up here to speak this morning. Now, Goolsbee was one of the Fed members who suggested that we're not out of the woods for a potential rate increase. I don't think that's going to be the case. I don't think the Fed's got the willingness to do that at the moment, but whatever he says could affect the market. Watch that close. And then, of course, we've got existing home sales that will be coming in today. Keep an eye on that. They're looking for that to show existing home sales increasing ever so slightly. Might be a mess considering what we're seeing in the weakness of the consumer here lately. We've got Atlanta business inflation expectations. Let's keep an eye on that. The prior was 2.3. Watch that one closely. Quarterly services survey. We've got a petroleum status number here today. And then a 20-year bond auction with a four-month bill auction in here. I'd keep a close eye on those before we head into that FOMC. I don't think we're going to learn anything more from the FOMC minutes than what we have already heard from every Fed member out there talking the last couple of weeks. I think we know that higher for longer is the theme here, but we'll see. There's likely going to be some volatility around that FOMC. Now, as we move into the afternoon, the big thing that's going to be coming in the afternoon is an NVIDIA report. NVIDIA, of course, very highly anticipated, but before that, this morning, we've got a few that we need to be paying attention to. I'm going to run through them really quickly. We've got ADI reporting this morning, moving up. BRC reporting this morning, getting a little gap up. LPG moving lower this morning. DY gapping higher here this morning. GDS will be reporting today. We've got KC reporting today. We've got Target report out, and this is one of those things that I was going to suggest, that we're starting to see some problems here in the consumers. Target suggesting that consumer buying has really started to diminish, even on the basics that everyone needs. And we have heard from Home Depot, we've heard from Lowe's, we've heard from Walmart that said that they had a pickup in earnings because of the higher wealth folks were coming in and buying at Walmart. Now, you can look at that in a couple different ways. Walmart kind of parsed it as, hey, the wealthy folks are coming in. We've done something, we're getting the wealthier folks to come in here. You could also look at it, the wealthier folks are coming in there because they too are running into some problems here on the consumer side. So we're getting evidence from McDonald's, we're getting evidence from a lot of those consumer-based companies. There is a struggle happening here, and if you want to see an interest rate cut, I'm guessing this is going to be the thing that breaks first, and that is we're going to see consumers really drying up on their spending, we're likely to see that affect anything in the jobs market. We could start to see those jobless numbers coming up because folks aren't spending. We don't need as much product, and jobless numbers go up. So I think we may be getting closer to a potential recession, that the inversion, this history-long world's biggest inversion of bonds, could finally develop into a recession. So watch that carefully here in the markets. Not a prediction, but there are certainly some things out here in evidence that showing there are some cracks in our economy, and they're starting to widen and develop, and it's particularly with the very stressed out consumer. If we go beyond Target, we've got Wolf, we've got PLAB, we've got TJX reporting today, VIPS, and we've got WSM, Little Williams Sonoma, in there. This afternoon, most notable, one that everybody's going to be paying attention to, is NVIDIA. Will be reporting this afternoon. We've got an ENS report. We've got a report from Ramp. Snow will be reporting. SQM, SNPS. We've got VFC, and we've got ZUO this afternoon. Now, there's more reports than what I just went through. Those are the notables, though, for the day. Those that have the potential to move the market a little bit more. So let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, that would be click those thumbs up buttons, leave a brief comment. That helps the channel to continue to grow, and I want to say thank you so much to everyone who does take the time to do that. I do truly appreciate it. It means the world to me, and thank you to everyone who shares these videos out on your social media feed. That helps an awful lot as well. So thank you, everyone. Let's take a look at a few things that could be setting up. Remember, everyone, these are not recommendations to buy or sell any security. Make sure you're doing your own due diligence. Be very careful in this market, because we have some data points that could certainly be moving us dramatically with some big point moves, and we've been coiling up here in this consolidation. So we're waiting for something, for some kind of a pop, and it could be up or down. So make sure you're prepared for those possibilities. Right now, I would have to give the bulls the edge because we continue to be in the upside trend. But remember, all trends break at some point in time, so you always have to consider the possibility, what if we do stumble? If we take a look at some of these stocks, take a look at CPNG. CPNG, really nice, tight consolidating pattern in here. Like the way that is potentially setting up. As you can see, I've placed a price alert up here just to be notified if that were to find this trend and pop on through. We've got a good support level in here as well. Watch that closely if that pops on through to the upside. Other stocks that I think continue to, well, just look pretty darn good. You know, if we take a look at TSM, I mentioned this one yesterday, popping on through here, pushing to the upside this morning, getting a little bit of that gap move up, and this may be working into some major highs here and all-time highs in TSM. Watch that closely here today, looking very good. Certainly still liking Boeing, despite the fact that it popped through and just didn't run really hard, but it is resting back. It's consolidating here, resting back here toward trend. I would be watching for that next opportunity to the upside here in Boeing. I think when you mention Boeing, you kind of need to take a look at Caterpillar too. Caterpillar made that nice little higher low here in the chart. trying to show a little rest consolidation in here the last couple of days. Look for that next opportunity that might pop on out here in Caterpillar. Looking pretty darn good. Still think this move in Alcoa is fantastic. And this is my alert here, and we just continued to push on through to the upside here in Alcoa, breaking through some significant levels of resistance. Now we're going to be coming into another area of resistance, so I would expect some kind of rest or pullback to occur here in the chart before long. Our trend in this chart a little steep at the moment for Alcoa. Longer term, of course, we could look right in here for that potential longer term, and that would suggest more of a consolidating rest could be coming here soon on Alcoa. Keep an eye on some of the copper plays. Even though copper is pulling back today, you'll want to watch this as we broke through this resistance to the upside. See if we can hold a little support in here. Other precious metals out there like GLD, although gold pulled back yesterday, boy, not much changed here in the GLD. And you can see a resting consolidation out into here, probably needed anyway, would set up that next opportunity to the upside. Keep a close eye on those. Other things out here, take a look at 3M. 3M has maintained this beautiful upside trend, finally getting another little resting consolidation pullback in here. Notice if we were to pull back just into this price support area and trend, we could find that next opportunity for that upside move. Keep an eye on 3M. I'm going to say the same on Altria. Altria consolidated. I mentioned this one yesterday. It ended up popping out yesterday, but I wouldn't be all that surprised if this just kind of rests over here toward trend, and then I'd be looking for that next potential move to the upside. Keep an eye on that. I'm still watching Pfizer in here. Pfizer's had a nice little resting pattern. This has been one of those stocks that's just been hated. And watching this carefully, I would be adding to this position, looking for a longer term hold on this. But Pfizer trying to hold a higher low in here, probably is going to have to consolidate some more, but watch that closely. Pfizer may be coming around. I would keep a close eye here on TLT, depending on how these bonds continue to react. Right now we're seeing that bond tick just a little bit higher here this morning, creating some pressure in here, but we've been building in TLT all along. Watch these higher lows in here for that opportunity that we could push on through. Take a look at BND as well. BND putting in a bullish pattern here on support and trend. I would be watching this pretty closely for that next opportunity for that to push to the upside, and particularly with the situation of the rapidly declining yen and Chinese yuan, there is some currency fluctuations out there helping the dollar to stay stronger. Take a look at UUP yesterday. UUP, big stretch to the upside here yesterday as that dollar surged in strength because of that uncertainty in other currencies and things going on here in the market. Of course, all of the hawkish Fed speak pushing that up. This morning we're seeing that wanting to gap down just a little bit, but I would watch that pretty closely here in the chart. If we were to break back above this downtrend here, that could really raise some concerns in the market if that dollar were to continue to strengthen. Excuse me there. So watch that closely. Other places in the market that we want to be paying attention to, take a look at RTX. RTX continues to be a very, very bullish chart, concisely moving, no big whipsaws, no big drama in this. And as we continue to see the geopolitical situations around the world not improving, I would continue to look for aerospace and defense to show strength. So keep an eye on RTX, keep an eye on Lockheed Martin, keep an eye on General Dynamics. all of those in bullish patterns and potentially have that opportunity to move on higher here as long as those geopolitical situations continue. So with that, everyone, I want to wish you all a fantastic day in your trading. I want to wish you great results. Thank you so much for being here and listening. I appreciate it. Thank you for the kind support to the channel. And I want to wish you all the very, very best today as always. And I'll see you right back here bright and early. Have a great day.